Welcome everyone. Today we will be discussing an important financial topic: home equity. Your home is not just a place to live, it is also a significant financial asset. Home equity is the difference between the market value of your home and the amount you owe on your mortgage. It can be a substantial source of funds. In this guide, we will explore the various methods to access this valuable resource. Our aim is to provide clear and concise information to help you make informed decisions. Greatway Mortgage Inc. can help you process taking out your home equity. First, let's discuss the HELOC, which stands for Home Equity Line of Credit. Think of it as a credit card, but secured by your home. The bank allows you to borrow against the equity in your property. Interest is only charged on the amount you utilize. It offers flexibility, borrow as needed when needed. However, exercise caution and avoid unnecessary spending. Next up, we've got the second mortgage. It's simply an additional loan you take out against your home, similar to your original mortgage but with more flexibility and different terms. Let's say your house is now worth $500,000, and you still owe $300,000 on your first mortgage. A second mortgage might give you access to an extra $100,000, which you can use for making home improvement like building that beautiful kitchen you always dreamed of. The upside? You get a big chunk of change up front, and the fixed payments make budgeting easier. However, second mortgages usually come with higher interest rates than your first mortgage, and you're stuck paying off both. Third, refinancing. Refinancing your mortgage is like giving your house a makeover, but instead of new paint and fancy light fixtures, you're getting a better interest rate and potentially some extra cash. It's like trading your old, reliable minivan for a sleek, sporty motorhome. Here's the deal. Let's say your house has appreciated in value and is now worth $500,000. You've been diligently making payments and only owe $150,000. You could refinance your mortgage for, say, $400,000, pocketing the extra $250,000. The perks? Refinancing can snag you a lower interest rate than other loan options, and it simplifies things by combining all your debt into one tidy payment. But you might have to pay a penalty for breaking your current mortgage early. It's an early exit fee for paying off your mortgage ahead of schedule. Fourth, now we're getting into the reverse mortgage. A move could be smoother than navigating home sales. Reverse mortgage. This one's specifically designed for those seasoned citizens out there, 55 years young and older. It's like saying, hey, I've paid my dues, time to let my house return the favor. Think of it this way. You've got this awesome house worth $600,000. With a reverse mortgage, the bank says, we'll give you a chunk of that value as a loan, and you don't have to pay it back until you sell the house or, well, passing. The amount you can borrow depends on your age and the condition of your home. And while it's true that you don't make regular payments, that interest keeps on ticking like a time bomb. And finally, sometimes the simplest solution could be the best one, like choosing the comfy sweatpants over the skinny jeans. Downsizing? Yes, downsizing. It's exactly what it sounds like. You sell your current home and buy a smaller, less expensive one, pocketing the difference. Let's say you're ready to trade in your sprawling mansion for a cozy cottage by the lake. You sell your current home for $500,000 and you still owe $150,000 on the mortgage. Voila! You've got $350,000 cold cash in your pocket. Buy that charming cottage for $250,000 and you've still got $100,000 left over. So there you have it. Accessing your home equity can be a smart way to unlock cash when you need it, but it's important to understand how each option works. Home equity line of credit, second mortgage, refinancing, reverse mortgage, and downsizing. Talk to a trusted mortgage associate from Greatway Mortgage before making a decision. Greatway Mortgage Inc. can help you make that informed decision. By understanding your choices, you can use your home equity wisely to improve your life without risking your financial future. Please like and share this video to your friends and family if you learned something. Thank you for watching, and see you next time.